Right. Mic check. One, two, three. Mic check. One, two, three. Hello, everyone. Welcome to the Black Brain Trust. Today is August 10th of 2018. I'm one of your hosts, Lionel, here with my other co-host, Mike. How you doing today, Mike?
I'm good, brother. Yourself?
All right, I'm good. I'm well. I'm well. Today we have a good show for you today. Also today is our 50th, our 50th episode. So congratulations to us. We're getting up there. More things to come. With all that said, let's get on ahead and get into our first topic for tonight. I'm going to share my screen again. All right. The first topic of tonight is from ccn.com, titled Wall Street Vet Warns of ICE Bringing Bad Banking Practices to Crypto. Article: Caitlin Long is a Wall Street professional with 22 years of experience, including running Morgan Stanley's pension solutions business. Recently, Long wrote an article about the financialization of cryptocurrency by Wall Street entities, describing the new initiative by ICE, owner of the New York Stock Exchange, to launch a new Bitcoin market called BAT as a double-edged sword. Long spoke with CCN on financializing in crypto, describing two forms of financialization, one of which improves liquidity through new investors like institutional investors, and is beneficial to the space. Quote, in the good context, liquidity is improving because an asset's investor base is growing. New investors are coming in, especially institutional investors. End quote. Cryptocurrency pundits have long been awaiting the arrival of institutional investors with the deep pockets required to bolster the market cap, and with custodianship and other traditional financial infrastructure being put in place, that seems to draw ever nearer. There is, however, a second type of financialization. Leveraged financialization mirrors fractional reserve banking. Right. Leveraged financialization also improves liquidity, but it does so artificially. In the negative context, it means liquidity is improving, but it's coming from the bad kind of leverage. Paper claims to an asset that aren't backed by the asset itself, or circulation credit, as economist Ludwig von Mises calls it, says Long. She goes on that she goes on to describe a method of creating value out of thin air that since the 2008 financial crisis has become all too familiar. Quote, the problem is that there's really no theoretical limit on how much paper Bitcoin can be created, and paper Bitcoin can offset Bitcoin's scarcity. We're watching, we've watched that happen in commodities markets and credit derivatives markets, where paper versions of the asset can suppress the underlying asset's price by offsetting the real world scarcity of the asset, such as gold and silver. End quote. Bitcoin's biggest defense is that most Bitcoins are stored off the internet, which will make it hard for Wall Street to source the actual Bitcoins and consequently keep a practical lid on how much leverage-based financialization can happen to Bitcoin, she adds. Long points to a recent incident with the Hong Kong-based exchange, OKX, as a perfect example of how introducing what equates to fractional reserve banking to crypto can go wrong. Exhibit A is what happened with Hong Kong-based OKX this week, where a large futures contract worth more than 400 million ended up such a big loss that it threatened the exchange's solvency because the loss consumed all of OKX's guaranteed funds. So the exchange haircut its other customers' gains in order to stay in business, a bail-in, she said, continuing. Quote, it's clear that OKX was creating unbacked claims to Bitcoin. Well, this could not have happened. A financial institution would only ever need a guaranteed fund if it's creating fractional reserve assets. In other words, a financial institution that is fully collateralized, fully backed by the asset against which it creates a paper claim, would never need a guaranteed fund. Interestingly, ICE's press release noted that BACS would be starting a guaranteed fund as well. So there it is, in plain sight. End quote. The Wall Street exec went on to point out that fractional reserve banking doesn't only occur where the Federal Reserve creates money from nothing, explaining how most of the credit created since the 1980s has been credit created in securities markets, not in the traditional banking system. Securities market credit is in the form of paper assets, usually piled on top of other paper claims to assets, just as banking system is. Quote, and this is what I worry will happen to Bitcoin. Paper claims piled upon paper claims to the actual Bitcoin. ICO doesn't understand Bitcoin. This is the worst part. Long fears that ICE, the owner of the New York Stock Exchange, will be a key player in the financialization of Bitcoin and other cryptocurrencies, and that the results may not be pretty. ICE will be launching a physically backed Bitcoin future contract, as well as full-featured Bitcoin market. She didn't mince words when it came to the statements made by ICE CEO Jeffrey Preacher, stating that he doesn't have a good understanding of the cryptocurrency. Quote, it was odd for the CEO to talk about bringing trust and transparency to Bitcoin when Bitcoin doesn't need either because it has already achieved both, end quote. Long went on to explain that through the backed startup, ICE will try to create liquidity by building exchanges for financial institutions and then collect fees and lend out client collateral and securities, lending slash repo markets. Quote, clearinghouses reciprocate, no, it's not reciprocate, we rehypothecate, lend out client collateral multiple times, forming long collateral chains in which multiple parties report that they own the very same single asset. Wow. This is one of the ways security markets engage in a form of fractional reserve banking. And you can't detect it by reading a clearinghouse's financial statements because repo accounting allows every party to report that they own the asset, but there's only one asset. End quote. So it's subtle. The devil is always in the details of clearinghouse collateral arrangements. For almost all clearinghouses, rehypothecate collateral, and I'll be interested to see if BAC plans to do this for its Bitcoin collateral. She she concluded, net net, Bitcoin holders have real reason to cheer ICE's entry, but also a real reason to be concerned about it. This is an interesting article. What it tells me is what we've been saying, that I will start to say it on the channel, and what we've been saying throughout the time we've been on, that once the institutional investors pour their money into cryptocurrency, then Bitcoin will, the price of Bitcoin will go up. After reading this, the price of Bitcoin may go up higher than what we thought because what they're saying is once this institutional investor on a little exchange gets into the game, on a New York Stock Exchange that is, gets into cryptocurrency, then they're going to create a derivatives market for physically backed Bitcoin. I don't I don't know how that's going to play over well, I don't know what the physical part of Bitcoin is going to be. If they mean they're going to have Bitcoin, digital Bitcoin, and they say that that is their physical Bitcoin, I don't know. And the derivatives part, we all know what derivatives part and fractional reserve. So I don't know where this is going to go.
Yeah. So Bitcoin and other cryptocurrencies will move from a more speculation side to a more financially engineered side, um, coming from the institutions, like was mentioned. So now they can control the volatility of the value of the cryptocurrency itself, which makes it easier for them to invest, and it makes it easier to manage as a whole. So when he mentioned in the article about securities being the only driver since the 80s, they're actually I'm actually in agreement with them, because student loans have now become a security on the asset market, because there's there's a high probability. I think it's something like two-thirds of student loans are actually going to default. They're now turned into security swaps, and now you can swap people's debts, and hedge on them, and have people paying into these high interest rate defaults that really not generating any benefit on the major economy other than for the investor himself.
So okay, I agree when you said they're gonna. Oh, what's going on, Fred? How you doing today?
What's going on, Fred?
Hey, what's going on, fellas? What's going on, fellas? Um,
You have anything to
that's
say
a
about
that
this?
that right there. What Mike just this described is a beautiful thing if you're on the right side of the table.
Lionel, finish what you were saying.
No, I agree with you said that uh, they are going to control the price of Bitcoin. Obviously, they have the money to, but I'm still trying to wrap my thoughts around the article. Um, I understand where you're coming from with the student loan defaulting. Obviously, people have $300,000 worth of student loan. There's a high probability they'll default on that. But how that correlates to Bitcoin, I don't see the correlation.
Well, if you think about Bitcoin in itself, it's really just a digital currency, but there's no real there's no hard asset behind Bitcoin itself, other than the mining aspect of it. I think what they're trying to do is they're trying to add something more concrete to it, to make it sustainable for and long term investing. If it's going to be on the markets and being traded as a security, according to the alphabet agencies, the SECs and the IRSs, and uh, the WTOs and whatnot, it has to be sustainable in that sense. And as it stands right now, it really isn't, because it's not backed by anything. So what it looks like to me is they're gonna add some weight to it, and make it a true security. Um, which is why I referenced the student loans, and even your major car loans. I mean, all of these numbers are just generated in the computer. There's no real actual money. So before Bitcoin even existed, um, before cryptocurrencies even existed, you had these digital loans that were being generated on these computers that they knew were going to be defaulted and actually be traded as security swaps on the market. So I think they
Oh,
want to do the same thing with Bitcoin.
so they're going to make, 'cause I know a couple of weeks ago, the SEC said, oh, Bitcoin is not security. So what you're saying with the on the stock exchange, they're going to make Bitcoin as security.
That's what it sounds like to me. That's what I interpret it as, from at least from the article and the headline buzz feeds coming in, is that
Oh, okay.
is that they can't really make it a full security, like it needs to be in order to be traded.
Beneath, so they're going to go back on their word from um, when the SEC said, "Oh, Bitcoin's not security," I think they said this maybe a month and a half ago. They're gonna have to go back on their word and say, "Well, we changed our mind. Bitcoin and if they say Bitcoin, Ethereum, and any other coins that they deem was not a security, they're gonna have to say, oh, these coins are securities in order for them to put them on the New York Stock Exchange. Then, in turn, once they're on the New York Stock Exchange, they can apply the fractional reserve and the derivative to them in order to gain more money from. Oh, you know what? Okay. I'm getting it.
It's just like the toxic mortgages, right? So the toxic
I love
mortgages,
this channel, man. Golly, love this channel.
right? The toxic mortgages were developed for the same exact reason. They knew that those loans they sold were bad and that they were going to actually come in and have to recover them. They were going to crash the market on purpose. They're probably trying to do the same thing with cryptocurrency. The only problem is that with cryptocurrencies, it's a little bit different because you have a thousand different, cryptos on the market that, serve different purposes. So everybody's, you know what I'm saying? You have penny based cryptos, and then you have your big whale cryptos like Bitcoin that are, that shot up to $20,000, and that made, Wall Street perk their ears up and say, this makes sense. Or what if the speculation is that it goes up to 150,000? I think Dollar Will spoke about that before. That Bitcoin can actually shoot up to six figures by the end of the year or sometime next year.
Okay, so
that's a mortgage in itself.
Yes, it is. It is. It is. When Bitcoin shot up to $20,000, people were actually taking out mortgages.
Yeah.
To buy Bitcoin. Now with how we're interpreting this article, and I forgot to do this. Whatever we're saying here, please find yourself a certified financial planner. You can go to cfp.net and find a certified financial planner in your area. Again, cfp.net. Put in your zip code, state, and city, and you can find a certified financial planner in your area. So how we are interpreting this article, she did mention fractional reserve and derivative. So they're going to put how we're interpreting this article is they put in Bitcoin on the New York Stock Exchange to be traded. Now she did mention that by adding the derivatives and the fractional reserve, more than one full brokerage company can own one single Bitcoin. So the E-Trades and Charles Schwab's and the Fidelities of the world can own one Bitcoin, the same Bitcoin. Because she said even on I forgot what she said, the word she used, you really can't tell specifically who owns what. So they can split that up even within their own firm and sell it to their customers and make more money that way.
Cream, go ahead.
Yeah, and with this whole thing, I mean, it may sound a little diabolical, that it depends on the side of the table or whatnot, but that's a kind of nuts and bolts of having free choice, free option versus controlled option. I mean, when you have a marketplace to where people have their free option, yeah, you'll have people getting in doing things that doesn't make sense. They're renting furniture at 32% interest and paying $5,000 for furniture that probably cost $200 to make, and the list price for it was probably $1,200, but they're paying $5,000 for it. But they have the free choice to go ahead and do that. Now, the fact that they didn't take it upon themselves to get educated, that's a whole different story. But it's the person who is making that option available to them. Are they necessarily a bad person? Look, I mean, there's McDonald's, there's burgers, there's fries on every corner. If I go 5-10 pounds over my ideal weight, I can't knock McDonald's or Burger King let me just keep it real. Checkers with those fries. I'm addicted to them. I can't knock it for having those fries. You know what I'm saying? But they didn't put a gun to my head and told me to go ahead and get them. So I know this isn't part of the conversation, but the whole thing of, are these things right? Should they exist? That's kind of the trade-offs. I mean, I think I see it as a black and white game, and there really is no middle ground. Either we have free choice or we have controlled choice, and everybody's protected, but you don't have any say so in what's available and what you have access to. I'm sorry.
Well, I would agree with you that that free trade and free markets actually is a good thing in capitalism. But the problem with that assessment is the whole purpose of cryptocurrency is to decentralize and to defragment the market from what it is currently right now. And if these big whales keep coming in and trying to engineer, solutions to a problem that they keep creating, and trying to crash the market again so that they can escape out with their golden parachutes, we're gonna have a 2008 all over again.
Mm-hmm.
Go ahead, Dollar Will. What's going on, brother?
What's happening, fellas?
How you doing today, Dollar Will? Oh, and to remind everybody, this is our 50th show.
Wow.
Already, I know.
Hey.
Yeah, something's going on with the alert system. I got the alarm checked and I didn't get any notification.
I think that's YouTube wide.
Yeah, something strange going on. So.
Did you catch the reading of the first article?
I did not. Again, I pretty much just joined around when I logged in, so I didn't catch that. So when I saw in the chat that he wanted me to participate, I tried to jump on as soon as I could. So I don't know where we are.
To give you a brief overview, the title of the article is if there was an interview, Wall Street vet warns of ICE bringing bad banking practices to crypto. And those bad banking practices they specifically said was derivatives, fractional reserve.
I don't hear you.
I hear you, Dollar.
I'm not here. I only hear you, Mike.
Primo, you there?
I hear the both of yous.
Oh, it's our host, Lionel. Is he still there? No, he's Lionel. I don't hear Lionel. Let's see, Mike. Do you know in short what was the part that you guys wanted me to respond to relative to that article?
I think it was talking about the securities, using Bitcoin or cryptocurrencies as a security on the market. And what I was referring to earlier was that if you move these cryptos as a security, then it goes from the volatility goes from being speculative to now being more engineered on the behalf of the whales.
I guess that would be a fear. That's a debate. I think that's something that we debate. I think, again, there's no, everybody's gonna have to make up their own mind how they feel about this. But a part of the part and upon security of something that's traded with high volume is that it's less possible for individuals or whales to be able to control it. So in that sense, I think bringing cryptos, you tell me if I'm responding to what you're talking about. Bringing cryptos on to the main markets, making them more accessible to the commoner, making it easy for them to trade right along with stocks, trading maybe as in the ETF basket or in their retirement fund. All those things are going to increase the volume, and I'm on the side that believes that the volume prevents the whales from really manipulating things. I mean, it's pretty hard at that point when you can easily get in and out of something, and there are all these different ways to participate in it for a whale or two to really control everything.
So I think there's only like maybe 1,000 investors or holders or hodlers of Bitcoin right now that control the majority of the stake in it. If I remember correctly, maybe Lionel could probably
See, it's actually more in greater danger right now of a few people controlling cryptocurrencies. It's you're at greater risk right now.
Right, and they're all whales, anyways. I mean,
Right.
no one at this point. I mean, Max Kaiser is a whale, for lack of a better description. I mean, he may be an individual, but he's definitely a whale at this point because he bought in early. I mean, he
Right.
bought in at $2 and $3 and bought damn near 100,000 shares. So
Right. It's sort of like, I guess, for people who believe in what's that laissez-faire capitalism, the only protection is knowledge, you know. And so these types of discussions that we have on this show, and the way we try to direct people's attention to information that's publicly available, as well as the art/science of trading, that's our best defense against whales controlling things, against the interests of the masses. You know, that's the beautiful thing about the oscillators and the volume indicators. You can see something that might look suspicious on one particular day when there's a huge transaction. You're like, wait a minute, that's likely one person. Something's going on here. You know, so that's why I'm a technical trader, because as a technical trader, that's what we watch. We don't know who is trading, we don't know why, but we know that they did, and so that's about as good as we can get. We'll never really know the motives.
well, the hyperledger of blockchain will allow you to see who's actually who purchased and who's selling off.
And you're right. That's great. And blockchain, if that's introduced to just stocks in mass, man, that can definitely revolutionize and create more transparency in all markets, you know, financial and otherwise.
But I thought some of the regulation, I think for FISMA, it might be FISMA, basically says that you know, financial information needs to be protected too. If I remember correctly, I'm maybe misquoting it, but I think basically the root of it is that
Individual, your personal privacy. You mean that kind
right,
of
right.
Right. Yeah.
It might be FISMA. It might be FISMA.
Yeah, I like to read that, but that's a balance we're gonna have to make. You know, right now there are rules that if you're like an officer of a company, you know, you don't have complete privacy over what you do with regard to transactions of that company stock. But so what you are bringing up now is how individuals